Good afternoon and welcome to HYCM's webinar FX Week Ahead live market analysis with myself, Giles Coughlin. Before we get going, could you just type in the question panel and let me know that you can hear me okay? That would be really helpful. So either in the question panel or the chat panel, just let me know that my voice is coming out okay. That would be super. Always reassuring to know that I'm being heard and not just speaking to myself. Let's have a look. I think I'm coming out okay. Could someone just type in and confirm that you can hear me okay? That would be very helpful. Okay. Okay, any problems? Yeah, that's great. Thank you, Hashik. Thank you for confirming that. That's super. Yeah, okay, I'm coming through. Okay. All right, hi guys. Kim, Peter, Salvatore, Ali, good to have you on board. Just to make it clear as we look at the HYCM disclaimer, just to make it clear that as we're looking at the week ahead, what I'm not doing is I'm not giving trading advice. This is all about trading education. So it's about how I, as a professional trader, understand the markets so that you can, as it were, look over my shoulder and you can start to develop your own trading plan and your own trading execution. So this is designed to be an educational webinar, just to make that clear. It's not a signal service, I have to say that, because some people may get confused and think that this is a trading signal service. So I just have to go through that disclaimer as we get going. Okay, so without further ado, let's crack on. And one of the first things we're going to crack on with is the looking ahead to what's driving the pound. Now, I really want to focus on the pound today, just to really underscore a very important point. Now, on the 12th of December, which is in 10 days' time, the UK is having December elections for the first time in around 100 years. So it's been a very significant time for the UK. And this is all tied up to do with the Brexit difficulty that Britain has had in trying to leave the European Union. It's 3 years now, hard to believe, since the British people voted as a majority to leave the EU. However, it's 3 years later and Britain still hasn't formally left. So this is why we're having these elections, in a bid to try and break the deadlock and give one party a majority. Now, at the moment, that party with the majority is the Conservative Party. So this was the polls from the most recent polls show the Conservative Party have a majority over Labour. And if you look here, you can see that this was last week's poll with a poll of polls. This is the poll of polls, which I like to use. I'll just pop that. What I'll do is I'll just pop that link into and send to you guys the poll of polls link. I'm just going to reply to everyone. Right, I've sent that political link, the poll of polls, and the Conservative Party was seen to be having a lead of 43% versus 29%. Now, the pound has been pressured this morning because latest poll data out over the weekend shows that lead has narrowed. Although the Conservatives are still having, this 43% lead, you can see that Labour have just crept up. So they've gone from 29% to 32%. So the reason the pound has been sold off this morning was because the lead has narrowed. So what's moving the pound at the moment is how big that Conservative majority is. So if that Conservative majority expands, so say all of a sudden Conservatives, there was a YouGov poll which said the Conservative Party was 49% and Labour was 29%, we'd see some strong upside in the pound. So when we look at the pound chart, just to get a sense of it, I'll just show you the pound is fundamentally has been bid on this belief that the Conservative Party is going to get a majority. Okay, so you can see this strong upside in the pound, just capping out about 1.30, and then each time price has been moved to 1.28, it's been bid. So 1.3 sold, 1.28 bid, 1.3 sold, 1.28 bid. Essentially, that's kind of the near-term range. This 1.3 and this 1.28 significant number on the upside and on the downside. So if that majority, conservative majority, increases, so say the Conservatives go up to 45% or 46%, and Labour goes down 29%, then you're going to see price moving back up towards the top of this range to 1.30. So that's what's going on at the moment. The pound has priced in a Conservative win, but what's moving the pound is the extent to which that majority is a Conservative one. The more of a Conservative majority, the better. Now, there's looking, you can see that the price, this is where price gapped down, sold down this morning, and we're finding sellers here again on the pound. So that's the latest kind of news. Now, what I did see before I came out is just released at midday, about half an hour ago, Ladbrokes are still projecting a 342 seats for Conservatives versus the Labour's 219. So often traders will look at implied odds from betting agencies or sporting indexes, but you know, the Conservative lead is still there, and the Ladbrokes lead is quite a strong lead. So we have seen some more upside in the pound. So a little bit of a mixed signal now for the pound. But what I wanted to flag up to you is this is what's moving the pound. So once you know what's moving the pound, you can check the poll of polls. I'll also send you the YouGov poll. Let me just send that out to you now. Just type it in so I've bear with me, sorry about this. I'll just, here we go. There we go, right. Here's the latest update on the YouGov polls, just seeing that out to you now. So you've got those poll data. And so look, when you're seeing the Conservatives increase their lead, then the pound will be supported. So that means that I'd expect pound buyers on any pullbacks. So say, let's take a hypothetical example. Let's say that the latest poll data comes out and the Conservative majority seem to have a big lead, okay? You know, and then so you'd see the pound spike up, and then I would expect
President Trump is just talking about, well, he's quoting Mohammed El-Erian here, US has outperformed the rest of the world in an eye.
And then you'd expect the pound to be supported on any pullbacks. So that's how I look to trade that poll data. Okay, obviously that's not trading advice, that's just showing you the education. So as long as the Conservative majority lead is in place, expect the pound to be supported. If that lead narrows, so say this Conservative goes down to 40%, Labour goes up to 36%, then expect the pound to be sold off. Okay, so that's the relationship to understand. Once you've got that relationship, you know, you're some way ahead to understanding what's moving the pound. I just wanted to flag that up to you because it's so helpful at the moment. We're now going to look at some of the data ahead on the calendar. There's some of the key things that we're looking at, and there's a lot going on this week, so there is a lot to be aware of. The first thing I want to, sorry, let me just get this, that's it. Okay, there we go. Right, the first thing to flag up to you is the Chinese data that came out over the weekend. Now, if you look on Saturday, we had some Chinese PMI data. You see that PMI data for China. Now, this is the official figure. The manufacturing, the non-manufacturing, so that's some of the heavy industries, some of the big state-run organizations. That's kind of the official PMI data. And we saw a beat on the manufacturing and the services PMI. Strong, good readings, very supportive for risk. That's good news for global growth. Similarly, on the, where is it? Here it is. Yeah, on the overnight, my time, GMT time, we had the Caixin manufacturing PMI. Now, this is the private, it's the small and medium businesses. So the other PMI data I showed was the official. This is the private. data, but the private data showed a beat as well. So you put that all together, and that was really excellent news for the Chinese economy. Obviously, the big concern about the US and China trade war is that it will be slowing down manufacturing, slowing down services in China. But this latest data is showing that the data is holding up. So that's supportive for global growth. It's supportive for risk. That's why overnight what we saw is an uptick in Asian equities. So I'll just show you the Asian equity market, and this is what we saw. See, we saw the Nikkei up 0.5%, the Hang Seng up 3.7%, the Shanghai up 0.13%, and the S&P 200 up 0.24%. So supportive for risk and supportive for the Chinese economy. So that's been a good start to the day. So that's the first thing to be aware of. So that's one with a slight positive risk tone. Some of that is being questioned now in the European indices. We're seeing the European indices tail off. So there's going to be the latest what's happening between US-China trade war. That's going to be continuing through this week, and it's going to continually ebb and flow with President Trump saying and tweeting different things. So that's just a key relationship to have in your mind, but the Chinese data is worth looking at because it's important. Now, this is an important data point out as well. 2 o'clock GMT time, we've got the new ECB President Lagarde speaking. Now, she's been very quiet about what her monetary policy outlook is going to be. So this is a very important speech because she may reveal what she's going to do with her monetary policy. Now, it's December the 12th. I think it's the 12th, will be the next ECB rate meeting when President Lagarde will definitely address monetary policy. However, the market is really hungry for any early indication of what she might do. Will she be dovish? Will she be bullish? She's expected to be dovish, and the outlook generally for the ECB is dovish because of the recent slowdown in data. There's been slowdown in some PMI data, and the outlook generally is poor, with a 10 basis point rate cut priced in for the Eurozone next year. That's potentially it's potentially a more dovish picture. So the market will be looking to see what Lagarde says. Be aware of this 2 o'clock, and especially if you're trading the euro. Look at it. Go to a news website, something like forexlive.com, and see what the speech is, because that you could get some volatility out of the euro, and there could be some movements that move for some time. Services PMIs coming out. Sorry, the manufacturing PMI rather coming out for the US dollar. That's important too, in a similar way that the manufacturing data was important for China, in exactly the same way it's important for the US dollar. Of course, the US dollar has been supported recently. There's been some pretty good economic data coming out of the US. So if that carries on, that important, that positive data, that will be supportive for the US dollar, supported for the US dollar Japanese yen pair and the US dollar Swiss franc pair. So look out for that coming later. The main event that's coming up this week is probably this one. It's probably the RBA rate statement that's coming out, and cash rate. Now, where are the RBA at? Now, they're at an interesting point. Governor Lowe last week, he was speaking on a unconventional monetary policy event, and what he said was that the RBA would only consider quantitative easing around the situation where the cash rate went from 0.75% down to 0.25%. So he said, we're some way from that at the moment. Now, after Governor Lowe said that, a couple of investment banks, Westbank and RBC, said that they were now expecting a 0.5 percentage point rate cut in 2020 and quantitative easing. So that's why we've seen some downside in the Australian dollar. That has been as a direct result of what Governor Lowe said and how the investment banks have reacted to it. So just want to quickly show you that. So you can see last week, you can see the Australian dollar selling off. We're getting a little bit of upside on the Australian dollar today because of the optimism around the Chinese economy. The Chinese yuan tends to be a proxy the Australian dollar tends to be a proxy for the Chinese yuan. So we're seeing some upside in the Australian dollar. But generally, you can see we're seeing this downside in the Australian dollar. And last week, we saw this downside on this negative outlook expected from the RBA. Now, the issue is going to be, will the RBA be as negative as the market is expecting? And this is why the rate statement will be carefully looked at. There's no interest rate expected. Now, obviously, if there is an interest rate change, there will be some quick and sudden moves in the Australian dollar. If there's a cut to 0.50%, expect instant and immediate Australian dollar downside. That's a scenario where I, as a trader, would instantly enter an Australian dollar short, okay? And I'd probably enter an Australian dollar short. I'd probably enter it against the New Zealand dollar. New Zealand dollar is pretty strong at the moment in comparison to the Australian dollar. But the rate statement will be key as well, because what the market will be trying to assess is, where's the RBA at? Are they thinking of a 0.5 percentage point cut in 2020? Are they thinking of quantitative easing? If they start talking about a 0.5 basis point cut in 2020, if they start talking about quantitative easing, then we're going to see some more Australian dollar downside. However, the thing to be aware of is, because the market has been expecting this kind of bearish outlook. So let me just show you. Let me show you Australian dollar and New Zealand dollar pair. You can see, like, compared to the RBNZ, you can see that there's been some good news for the New Zealand economy and some more negative news for the Australian economy and Australia's central bank speech. So that's why we're seeing a lot of Australian dollar, New Zealand dollar downside. Okay, so in order for that downside to continue, there needs to be some more dovish, some quite a dovish outlook from Governor Lowe out to tonight. So let's just find my, there we go. So when we have the cash rate statement, read it carefully. Look for a more dovish outlook. Okay, you can get it on the Australian dollar, you can get it on the RBA central bank. You can follow along on loads of different news outlets, FX Street, forexlive.com, which will tell you what's going on. But that's what the risk is they're more optimistic. So the risk is you get some Australian dollar strength. So be aware of that. That Governor Lowe says the market's been too pessimistic. No, we're not expecting 2 rate cuts. Anything like that will be quite strong for the Australian dollar. So this is what I'm expecting. If the RBA are dovish, expect further Australian dollar, New Zealand dollar sellers. Okay. If the RBA are hawkish, expect euro Australian dollar sellers. So let me show you. So if they're dovish, expect more Australian dollar, New Zealand dollar downside. So then it'll be any pullbacks would be opportunities to get short. If the RBA are hawkish, then expect euro Australian dollar sellers, and any pullbacks would be hawkish in that instance. So you've got 200, 100 exponential moving average here that's finding some temporary support at the moment. If the RBA was hawkish, they were more optimistic, then you expect this 100, 200 exponential moving average to fail, and then expect sellers on a retest, which would be in line with this recent support and resistance level. So you can see there's some temporary support there. You get a optimistic or a bullish RBA, you'll see that level will break, and then a retest back up to that level. I'd expect sellers to be found at that point. So that's what I'm looking at for the RBA rate statement, and that's probably the biggest event of the week. Okay, so we've got a big event coming out. Be aware of that. Be tuned in for that. Next events, we've also got GDP, which will be important for the RBA as well. So it's unfortunate that the GDP data is after the rate statement, although they may have seen the GDP data in advance. But then obviously you've got to read the GDP data in light of what has been said earlier. Okay, so just be aware of that coming the next night. The Bank of Canada Now we've got a very, again, interesting rate statement. This is probably for me the second most important event of the week. And we've got the interest rate decision for the Bank of Canada. Where's the Bank of Canada been? Now, the Bank of Canada have been quite optimistic for quite some time. They have been, up until their last rate statement, they were the only central bank to not develop a dovish outlook. However, in the last rate statement, they took a bit more of a dovish twist. They were stressing about the concerns they had around global growth between US and China, the trade war, and how that would impact the Canadian economy. So the key thing to be looking at for Wednesday is, does the bank, does the governor, Polotz, continue with that bearish outlook? Does he say, you know, this is the case? Or does he draw on some of the more optimistic data that has been out of Canada recently? So you look at last Friday, we saw that there was some pretty good GDP data out at 1:30. Now, this doesn't give such a good reading as it actually was. There was some really optimistic and good components of that GDP rate, which basically means there's probably no need for the Bank of Canada to cut rates. So the Bank of Canada, they're expected to keep rates on hold. And again, it's going to be the rate statement that's going to be key. So once again, look at the rate statement and see how that contradicts or confirms what the market's already thinking. And the basic outlook is the market really wants the Bank of Canada to turn dovish. So if it does turn dovish and does say, you know, we're going to be looking at interest rates that are going to be cut next year, expect some quick Canadian dollar selling. And the best pair that I would look at for that will be the US dollar Canadian pair. So this is a potentially good pair to be looking at. You can see we've got, let's just go to the daily chart. You can see, look, we've got this overhead resistance on this descending trend line, 1 touch, 2 touch, 3 touches, and this is going to be kind of a key line in the sand technically. Okay, and if we get sort of, you know, a dovish outlook from the Bank of Canada, then expect this to form a support, this trend line. So any return back to that level there, here, if we get a, you know, a dovish Bank of Canada, expect that trend line to form support on any retests, and expect to find US dollar, Canadian dollar buyers. So that's what I'm expecting for the rate statement. The other event to be aware of is the OPEC meetings. Now, right, what's going on with oil at the moment is that Saudi Arabia is having a IPO, initial price offering, for a formerly state-run enterprise of their oil industry called Aramco. Now, that's a big deal for Saudi Arabia. They're wanting to get a lot of interest, and they're wanting to get a lot of investors into that that initial price offering for their company Aramco. Now, in order to interest people in that price offering, what Saudi Arabia really want is a high oil price. Because obviously the higher the oil price, then the more valuable and the better investment and investment into their oil production company is. So on the 5th of December, they're meeting. And what Saudi Arabia will really want to do is they'll want to surprise the markets with some extended rate cuts. So at the moment, there's been some talk, which has been supportive for US oil today, that the OPEC plus suppliers will have a further cut of 400,000 barrels per day. Okay, there'll be a 400,000 barrel production cut, which has been supportive from oil. So the kind of the incentive is for Saudi Arabia on this OPEC meeting to surprise the market with greater oil cuts. They would really love to cause oil to spike. Okay, so that is the pressure that's on for oil. And we can see that oil sold off very heavily last week on the notion that maybe the cuts wouldn't be coming. So this is what's saying, but I just want to make it clear to you guys that the the pressure is on for Saudi Arabia to put pressure on its allies and other oil producers to say it will cut rates because it wants a high oil price for its Aramco IPO offering. So just to be aware of that. Now, obviously, we don't know that's going to happen, but that's the pressure. And we've been seeing buying, haven't we, from this 55 level. Okay, so this 55 level has found support here and here recently, and that will be a key level in a line in the sand. But any production cuts greater than 400,000, expect more US oil upside. So that is something to be aware of on the Thursday. Okay, so stay in touch with that and what's going on there. Let's see what else we've got. Yeah. Okay, Governor Orr speaking on Thursday. Just worth checking in, just seeing what Governor Orr is thinking. The RBNZ has been on hold recently. So I just want to stress this to you, this divergence between the RBA and the RBNZ. Okay, look, you can see that because the RBNZ is on hold and the RBA expected to be more dovish, that's why we're seeing this Australian dollar, New Zealand dollar downside. Okay, now you can expect that downside to carry on. If the RBA is dovish and RBNZ is more bullish, then expect this downside, and again, expect sellers on pullbacks. So potentially that could be a decent swing trade. You can see the recent lows have been broken. So a retrace back up to these levels here, 1.0650 and above. See, that's this, that is, for me, that is a key level. Okay, so technically that's a key level. Let's look at the Fibonacci. Where's that? Yeah, okay, so look. So you can see at the moment, this level here is 50% retracement from the November highs and today's lows. So if we get a dovish RBA, if we get a more on hold or optimistic RBNZ, expect more Australian New Zealand dollar downside. And just out of interest, Goldman Sachs were out with a piece last week saying that they expect the New Zealand dollar to benefit more than the Australian dollar on a US-China trade deal being resolved. So that would favour more Australian New Zealand dollar downside as well. Just say that as an aside. So worth checking out what Governor Orr says, particularly if Governor Lowe of the RBA is more dovish. Okay. Then finally, on Friday, we've got the Canadian dollar employment, unemployment change, and the non-farm payroll data. Again, they will just form importance as part of the overall picture for the US and the Canadian economy. There's nothing there that I'm particularly necessarily expecting to be market moving. However, they could be if there's any major deviation from the price. Guys, that is the main data to look at for the week ahead. Obviously, also don't forget to look at the US-China trade war. We've got constant ebbs and flows going on with that. So just to be aware that US-China trade negotiations, tweets from President Trump, any messages from the global times, it has a potential to move the market strongly. And there could be new data points at any time. So just be aware of that US-China trade war that's constantly in the background. Don't forget it, particularly if you're trading the yen and the Swiss franc. The danger is the yen could be strongly bid, or the Swiss franc could be strongly bid on any negative US-China trade news. So do remember that. Also, remember, we've got a workshop tomorrow. On the workshop at tomorrow, I will go into, a currency pair that I'm looking at, and we'll be looking at the technicals and the, the way I go about, lining up entries, exits, where I put my stops. Just go into some more details here. Again, not for a signal service, but just for general education, so you can see how I go about making trading decisions. Also, don't forget that you can give me your trade ideas tomorrow as well. So as part of that online trading workshop, you can just suggest any trade ideas that you're looking at so we can go through them. I hope that, guys, has helped. That is the end of what we're looking at today. We've covered the calendar. Don't forget Christine Lagarde. She'll be speaking shortly today, and pay attention to what she says. And don't forget the RBA out with their rate statement tonight. So that's the two key events that are expected and that are ahead. I hope you guys have a really good week. Thank you for attending the webinar, and don't forget we can speak again tomorrow. Thanks now. Goodbye.